Assalamu alaikum. The topic for today is limitation of PED analysis. Every tool used for any kind of analysis will have its strength as well as its limitations. I've already highlighted why PED is used by firms, but there are certain limitations also. Number one limitation is time lag and response bias. Because of this, the values of PED that you have may not be accurate, thus making your analysis biased. Conditions, for example, may change, conditions such as income or taste, which will make PED calculations invalid and outdated, and therefore they may not give fruitful result, or using them may not lead to the results that will actually give you results. Also, collecting and tabulating data can be expensive both in terms of time and money. So these are a few limitations of PED analysis. Therefore, firms and the economists as well as the government, while using PED analysis, need to use a combination of tool or an integrated set of tools instead of one tool in a standalone manner. What is the relevance of PED? PED basically permits the firms to predict direction of change and its revenues. It needs to see if the price is elastic, inelastic, unitary elastic, or what kind of elastic, and then they can see the impact that it will have on their revenue. For example, if the demand for a product is elastic, if they increase prices, their revenues will drop significantly because there are close substitutes available and people will change to those closer substitutes. On the other hand, if the price is inelastic, there is a chance for them to charge higher prices and maximize their profits as well as their revenue. Secondly, PED enables comparisons of quantity changes with price changes that can allow them to find out how much quantity they need to supply as a response to certain changes in prices. PED is used by governments also, and it allows governments to estimate the size of necessary tax required to decrease consumption of demerit goods such as cigarettes or alcohol drinks. They will see what kind of tax will significantly lower consumption of demerit goods and what kind of changes would lead to significant increase in consumption of merit goods. Firms can affect PED through advertisements, which can help them build brand loyalty and make them lower the elasticity of demand for their good. It means that if the consumers are more aware, if the consumer are more loyal to a brand, the demand for their good will become less elastic. As the consumer is loyal, their taste and preferences will not change no matter what the price. The burden of taxation is also determined through PED. If a product has elastic demand, of course you cannot charge higher price in form of taxes from the consumers, because consumers will quickly switch to other alternatives if the prices go high, even to a small extent. However, in case of inelastic PED, burden of tax can be passed on to the consumer because there will not be a significant decrease in the amount purchased by people even if the prices increase. The second kind of elasticity that we are going to study is income elasticity of demand. It means it's measure of the responsiveness of quantity demanded to percentage change in income. This is an example. YED is called income elasticity of demand. Let's have a look. Percentage change in demand will be, quantity demanded will be 100 minus 50 upon 50 into 100, and percentage change in income would be 120 minus 100 upon 100 into 100. Okay. So here this is 100 upon 20 is 5%, and for this product YED is 10 upon 10 minus 20 upon 10 into 100 upon 120 minus 100 upon 100 into 100. So this is 20 upon minus 100 upon 20. This is minus 2.5. Okay, so one of them is positive YD, other one is negative YD. We just need to have a look at the sign for direction to see what are the changes in the quantity demanded as a response to income, change in income. If it's positive, it means both go in the same direction, one increases, other also increases. If it's negative, it means that they are inversely proportional, one increases, the other decreases. So what do we see here? This product we can see just by looking at the values. As the income increased, the demand also increased. So this is a normal good, right? And as the income increased, the demand decreased, then this is an inferior good, because we know that the demand for inferior good decreases as the income increases. So let's have a look at the YED values. When YED is between 0 and 1, this is a necessity, and of course it's a normal good. Normal good can be bifurcated into two parts. It can either be a necessity or it can be a luxury. So when YED value is between 0 and 1, it's a necessity, and they are income inelastic in nature. For example, if income changes by 10%, the demand for it will change by 3%. If YED is less than 0, then it's an inferior good. An example of inferior good can be cornflakes manufactured by a store rather than cornflakes of a brand. As soon as the income changes or income increases, the demand for company made cornflakes will increase. If YED is greater than 1, then it is a normal good, but it is a luxury. A given increase in income will lead to a proportionately larger increase in demand. For example, if income changes by 3%, then the demand for that good will change by 10%. What are the factors that influence YED? Number one is the economic factors. All the economic factors that influence wages of workers impact YED, because of course YED is dependent solely on income, or it's the measure of responsiveness to the demand as a response to change in income. Second is recession. Recession leads to lower wages, gives rise to demand of inferior goods, and also leads to reduced demands of luxury. So this is going to impact YED. Next is economic growth, which leads to increased wages and demand for luxuries goes up, demand for inferior goods comes down. Other factors that may influence YED include minimum wage. A minimum wage increase can influence YED by directly impacting the disposable income of low-wage workers, potentially leading to changes in the demand for goods and services, depending on whether they are considered normal or inferior goods. How minimum wage affects YED? When minimum wage rises, low-income workers have more disposable income, which allows them to buy more goods and services, which can lead to a higher YED for normal goods. Next, it can lead to shift in demand patterns, which result due to increase in purchasing power. Minimum wages also have an impact on specific industries. Industries that cater primarily to low-income consumers could experience a significant increase in demand following a minimum wage hike, as these consumers have more money to spend. How taxation influences YED? Taxation can impact elasticity of demand by changing worker wages. When taxes change, workers' wages may increase or decrease, which can impact demand for different types of goods. Next is legislation. Legislation impacts consumer income levels, which directly affects how much they are willing to spend on different goods. thus changing the demand for those products depending on whether they are considered necessities or luxuries. Next is increased international trade. This can impact YED by exposing consumers to a wider variety of goods at potentially lower prices, which can affect their purchasing behavior based on income levels, leading to changes in demand for both domestic and imported goods, particularly luxury items, and impacting the overall YED value for different product categories within an economy. Also, there is price competition. If there is increased international trade, there's a shift in consumer preferences and impact. It has an impact on income distribution as well. That is why these factors can impact YED to a great extent. Importance and relevance of YED for the firms and the government. How for the firms? It helps them understand consumer behavior, analyze markets, and plan strategies. If consumer behavior is changing, then obviously they will know, if consumer income is changing, they will know that which kind of goods they should start manufacturing more in order to maximize their revenue and their profits. Firms can effectively navigate evolving market dynamics and position themselves for sustainable growth because they cannot let themselves go down the drain because income of certain consumer groups has decreased. And how government uses YED? Government basically uses YED to understand how consumers demand for different goods and services changes based on their income levels. And why do they need it? It helps them make informed decisions regarding taxation, economic planning, and subsidy policies, particularly when targeting essential goods for low-income populations or promoting specific industries during economic fluctuations. The government should know which goods are essential goods. It will enable them to identify taxation strategies, draw economic stimulus plans, and decide which industries need to be focused on for development purposes.